Had trouble coming up with a title today. I went with It's Another Manic Monday. I could have went with I Don't Like Mondays, the old Boomtown Rats song. But here we are, folks. That rally on Friday, poof, gone in an instant. That's the bad news. The good news is we haven't taken out Friday's low yet. Let's talk about the S&P ads. Let's talk about the story stocks of 2024. Tim Quast coming on 8:35, and you know Tim, man. Tim had a little bit of a bearish tint before. So let's get things started on this Monday. Let's figure this market out on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders. If you got long off the open, you had about 30 seconds to figure out you were dead wrong. Lower open, we're trading near the lows of the session. Only number on the downside, 56.73. That was your low from Friday. That matches your September 12th low. The buck in the red again here, but at least has a couple lows in the same area, down 14 cents at 103.67. TLT perking up 95 cents, 91.06. USO in the red after 2 good days. Traded down 49 cents, 71.60. GLD up modestly. SLV down slightly. Bitcoin, I guess going into reserve is a bad thing. It's down $4,260 at, this is called 83,000. Let me stop the screen share, and we need to get the most important information of the weekend, and that is how did Spencer do at his hockey tournament?
Do we have frozen Triple D?
The audio is choppy for me, so I might have to restart. He did good. So can you hear me?
Yeah, I can hear you now.
Okay?
Mm-hmm.
I don't know what's going on. The audio is choppy. I may have to restart this old HPQ computer here because this computer with the Intel processor is junk. But, they won. They won the whole tournament, Niagara Falls, so it was awesome. A lot of fun. Yeah, we won the last game. We won the last game big time, 7-1, so it was good. Spencer got a little roughing penalty there at the end of the game, so that was interesting too. But it was good. Lots of fun.
You must have been proud of him.
Can you hear me okay?
I can hear you fine. You were just a little frozen.
You know what? I'm going to go off for a second. I got to restart my computer. Yeah, I've got to restart my computer if you can hear me because this computer is acting up. So I will be gone for about 3 minutes.
Mm-hmm. He tells me to restart my computer every day, Christian, and then he has to go do his. So, Christian, you've been cautious on the market the last couple days. Are the gloves coming off in today's session?
Not until we kind of see some type of confirmation that we've stopped going down. I think that we just continue to kind of descend down in a channel. We were talking a little bit about this before it came on, but it's pretty much, and I'll borrow this a little bit from Dennis, is that rips are getting sold, and we just continue to move down. And this is just an S&P chart just on 1 hour, and I tend to look at multiple time frames because they give me some hints about what's going on here. And there's no mistake about it here. Over the last few weeks, we've just been kind of going down and down and to the right. And every time that we rally a little bit, and I wasn't here on Friday afternoon, but I was like, this is a nice rebound. I was like, could we actually be turning here? But you look at the 1 hour chart, just like I think we rallied on Wednesday, was it too? And you look, and we're just not taking back any like technical, we're not making a turn. We're just kind of getting to the top end of the channel. And then we kind of stall out and move lower, and that's kind of what we have this
How
morning.
do you define what was the first term? Like how do you define like stop going down, or what's your criteria? Now I
I
know
look
we
at
both do different sets of technical analysis, but give me yours and I can give you mine.
Yeah, so this is just again, this is S&P futures, and I have just a 5 period moving average. This tells me basically like every time that we rally into this, we are not overtaking it. So this is just very simple. I kind of refer to it as like having training wheels on your chart. It just tells me the same thing when we're moving up too. If price remains above the 5 period moving average, there's buyers presence. There's buyers that are present and are keeping the trend up. Right now, there's sellers present and they're keeping the trend down. We cannot retake that 5 period moving average. So it's just a great little tool to have on your chart to say, it's a very fast moving average, but look at how like well price is
Is
respecting
that
that.
what period? Is that an hourly? Is that
This is just the daily chart. So it's a 5 period
oh,
moving average, and like you'll note here too, like when we're moving up, we stay above it. When there's buyers, so it's just very good for simple trend analysis. And
so
right,
the period is the daily? It's the
yep,
daily time
it's
frame?
it's just a daily chart. Yep.
Okay.
And using that 5 period moving average, you can see since we broke below here, back in the middle of February, price has not been able to retake that. So that's what I'm looking for. So when price starts to at least get back above that 5 period moving average, I know that something's changing. The selling is drying up. Buyers are returning. But since we started to move down in mid February, there's been no question. Like, and that's why every single thing that I have on my charts I use for a particular reason. Uh,
Mhm.
this just tells me when we're trending, right? We just stay either below or above, and right now we're just downtrending. So again, nice bar on Friday, but one bar or one day doesn't change a trend, and we're
That's for sure.
continuing.
So for me, uh, it I don't have as many lines as my chart. Maybe I should. I'm more of a numbers and price guy. But one criteria is I had for stop going down is to make a couple lows in the same area. And you did have a 56, 71.50 low. Boy, I had that marked a long time ago. That was going back to last last September, September 12th. So if that's a capital I, if that low can be defended and we can calm down, have like a couple inside days, just with this volatility, with this 100 and 110 average daily range, we're not just going to turn around and go straight back up. We're not in Kansas anymore. So what I'm looking at for the week is that low holding. Boom, an inside day or two, a little bit of complacency, average range coming down a little bit. But that is not exactly, what we're seeing right now. So right now we're trading on the lows of the pre-market session, and not much until we get to 56.73. I don't know. Can Dennis come back here? I see him in the chat. I don't know if is he trying to message us here? No, he must be rebooting that computer. So, uh, let's get to. We did have some stocks. We did some action on Friday. The S&P ads. We could talk about those.
Sure.
We could talk about the ones that went in and the ones that didn't go in. So, let's talk about the additions first. DoorDash. I don't know why they're an S&P 500 company here, but trading up in the pre-market. DoorDash trading up way off its high for the session, up 542. It looks like they used this opportunity to sell the rip here. Pre-market high over 194. Boy, oh boy, in this market environment, I would say you may just get a gap fill. The gap fill, the top of yesterday's range comes in at 182.96. You're almost back to the top of the yesterday range. After that, maybe get down to the close.
Yeah, I thought that the overall the list of adds and deletes, a little bit different than what people were anticipating. We talked about a couple of the names that by the way, VIX is cranking up here. So, maybe we finally do get a little bit of fear in this market. We're at 26 right now in the VIX as futures just take out the lows of the session. I thought that the list was kind of interesting. DoorDash being one of them. DoorDash is I think can go fine for that name to go in there, but yeah, a little bit different than anticipated. I think a couple names that were people were looking at were Robinhood as well as Coinbase. Those names did not go in. AppLovin, but different group of names. I think nothing wrong with DoorDash going in, but tough environment as you made a great point here. It's not holding the gains, and I think also when you look at your list of stocks that are getting hit the most this morning, it's that bucket of things like DoorDash. So there's a lot of growth stocks. There's also a lot of AI stocks that are leading lower this morning.
Yeah, we're not back. We're not in Kansas anymore, Christian. Like that's what this as well. It's just not 2024 where you're going to get an S&P ad. It's going to go up 10%. We're all going to party and have fun. Rips are getting sold regardless of the news in some cases here. So I know DoorDash was up significantly, on obviously Friday night, but now you get a serious sell-off in the markets. And as much as a rising tide lifts all ships, a sinking tide doesn't. I don't know what the opposite saying would be. I've done that before. Williams-Sonoma, again, is the same story. It's getting a lift here, but you just look at all these charts on these growth names. Maybe we just stick with Dash because it is one of, the higher valuation growth names. They all look broken. I mean, you're your moving average guy, Christian. You've been talking about it. A lot of these stocks now trading below their 200-day moving average, and you've said it before too. Nothing good happens below the 200-day moving average. It's hard to be a buyer of all these stocks, even when they get, added to the S&P here, because right now the macro continues to drive the bus.
Okay, just a real quick. Dash is off its high on TKO. That's a stock that has been in the dumpster and got a little bit of a pop. Look at that 50-day moving average sticking out like a sore thumb at 153. Williams-Sonoma, some of the most expensive stuff I've ever seen there. That's trading up. I like to see, is it above 190? Wow. That 190 is an important area. Better hold 190. The 50 days up there a little bit. EXE, they added that thing. Boy, that's getting the pop up $2. We'll see if that holds. But this kind of fits with the theme, Dennis, that you wanted to talk about. And with Hood not getting added and App AAP not getting added, it's what's happened to the story stocks of 2024.
Well, that's it. And, Christian's been talking about this. We've been talking about this. These are the stocks that are not working in 2025. And it completely reversed. Like we talked about this leader to laggard, laggard to leader potential trade in late December and early January. We started to see it happen. It has virtually continued here. This has been more of a value market. Now, again, everything is starting to get hit here to a certain extent because the U.S. markets are just not the place to be lately. But I mean, value is still outperforming growth, is it not, Christian? Like just
Yep.
sticking with the U.S. here right now. I think we're still seeing, even though value has been coming down as well now, value is still outperforming growth.
Yeah, absolutely. And again, I left early on Friday, but before we kind of really started to reverse and go higher. But one of the things that I was watching on Friday was like how some of the consumer staples were trading. And when I see names like soup companies, Campbell's and Hormel, which I refer to as like when you see spam go up, you're not in a very good market. And
No.
HRL, I think they backed off from the highs there. But like I said, when I left, these things were going straight up, and I was like, "Oh, geez." I was like, when I see this and every other like consumer staple like Procter and Gamble, and I was like, "Man, this is really risk off going into the weekend." Now, again, we did reverse. I mean, what did you think about that? I mean, did you think that we were going to get follow through today based on how we moved on Friday?
No, and this is what the fade trade is all about. I mean, obviously it was off on Friday, but I was looking, just from my phone, and I was like, you're selling rips, man. When you get these 100-point pops, you're selling rips. And just going back even to your S&P 500 charts here that you were showing us this morning, Christian, I mean, the channel's clearly down. We are struggling in the last month. We are struggling to hold a rally for even a day. So it seems like we get a pop, we get a 100-point pop, and there's been like a half dozen of them. It holds for a day or two tops and then gives it back. And I mean, this has just been the trend. And the trend is your friend. And the trend is, honestly, unfortunately, at this point in time, for the SPY, it's down. So, I mean, I think you still got to be in that camp where we're going to be choppy. Don't chase moves. I mean, the dips, some of them are getting bought too. And you can, as a trader, flip out, flip out, flip out. But it seems like if you stick with the stocks for more than a couple of days, you end up being down again. And I mean, this is just, an ugly market, especially for those growth names of 2024.
This is just showing my favorite data window here. When you're hot, you're hot. When you're having green days, you're having green days, right? You have a red day, but you come right back. Green day, green day, green day.
What
red
are the
day, red
dates
day.
on those? It's just hard to see because it's small. So I'm just curious.
This is beginning of February.
Yeah, so beginning of February we were okay. And now it's
Yeah.
completely
Yeah.
changed.
And then February 19th, you had the little down day, then a big down day, then a little down. Then you were just kind of chipping away. Remember when we were just just kind of just like being a little bit complacent, and then kaplooey. And then you have one up day followed by two down days. So it's just no consistent pattern until you can see 2, 3 up days in a row. It's hard to get optimistic. As far as the overnight action, the way the market traded on Friday, Dennis, you weren't here. We were in the dumpster, okay? And then pumping Powell, came on, and I don't even think he said anything that great, and they just took this thing up. I mean, there was some whipsaws in between, and so by the end of the day, I'm like, wow, Powell didn't say anything that great. I was thinking for the weekend, I'm like, maybe we open flat. If we would have opened flat, then I'm thinking of, risk, yesterday's high, Friday's high might not be a bad stop out point. But we opened up down 20 handles and didn't even blink. I could give you the open here. So, I mean, the market the fade market works. You just got to be just really quick, because right here was the open on the 8th, and we just went straight down from the open. So
I
that's
want to
it.
take this back international here for a second, because Christian obviously been pointing this out, and we've been pointing it out on this show. Is Europe is doing great here right now. And I know everybody wants to buy the dip in the US. Everybody wants to buy the dip on all these storied stocks from 2024. But the dip buying that is working in February is international. When we're getting these dips in EFA, it's probably the best one to bring up is the EFA.
Okay.
Those dips are getting bought. And I really believe we are seeing money pull out of North American markets here right now. We gave this conversation last week when I was here Thursday, but I want to reiterate it because I think it's really important. As much as the S&P has been in a hard downtrend for the last couple of weeks, EFA has been in an uptrend and is looking good. And I mean, why is that? Well, common sense says we have so much political uncertainty in the US. We have so much political uncertainty in Canada. We have so much political uncertainty in North American markets. So let's just say that the international investor, money from elsewhere, is probably looking and saying, hey, here's, North American markets, S&P trading 22 or 21 times, forward earnings, which is, high on the valuation scale. Here's international markets, some of them trading 14, 13 times, 15 times, and saying, maybe, valuations are more attractive, one, overseas, and two, I don't have that political risk, that risk of tariff wars, because let's be honest, in Europe, it's not nearly, as significant, this tariff war as it is in North America here. So I do believe you're seeing international money, and it's showing up in the price of EFA, it's showing up in the price of FXI, it's showing up in the price of SPY, move from those US markets into other non-North American markets. And that trend probably continues until the tariff war starts to cool or potentially end. So, I mean, is at this point in time, Christian, are you looking, to Europe here? And obviously you're always looking for momentum, but you've pointed this out. Europe's got a lot of momentum right now.
Yeah, and you're also getting the kicker in these ETFs with the weaker dollar. I mean, the dollar. If you could bring up the chart of the dollar too, Joel, because when you own an EFA or when you own an EWG, which is Germany, you're essentially, they're holding a basket of stocks that are in local currency, but the ETF trades here and it's not denominated in US dollars. So when the dollar goes down, automatically those ETFs are going up just because of the currency of,
Great
just
point.
because of the mechanical nature of where they're holding their stock. So you're essentially by owning EFA or EWG, you're essentially short the dollar. So if the dollar continues to go down like it's doing, that's what's also bringing up these stocks. Not only is the local market rallying, their own markets are doing very
Mm-hmm.
well, but also you're getting that currency to effect
Bump
that's
as well.
happening, which is making these things go up too. So you almost have to take a view on the dollar too a little bit. Like if you think the dollar is going to stay depressed, then you want to be in some of these areas too. I don't have to answer your question. I wish I was a little bit longer international. I've been positioning in China a little bit, and Singapore as well. But I need, like, I'm looking for a little bit of a dip. We talked about EUFN, which is European financials.
Yep.
I can't buy this chart up here. I can't buy the
Chase it.
chart.
Even you can't buy this chart up here.
No, I mean, even like I need a dip. I need some type of a check back. But this is a runaway freight train right now,
Yeah.
going on in European financials. I mean, this
Well,
is
There's
very strong.
but just to get away from stocks for a second, Europe is kind of taking a page out of our book, and they have to. They're spending. They're spending a lot of money. They're pumping money into their economy. They're pumping money primarily into their defense, which they need to. They very much need to build up their defense forces. I mean, we all can see what's coming, and they're spending money, and we're cutting back. So that money, they're pumping. They're pumping
That's a
into
great point.
Europe. Yep.
It's a great point. I mean, all of these cutbacks, and we get Doge, and we all want government efficiency, but at a certain point in time, they're costing jobs. I mean, a lot of this, it's not just like you could just go through and let's just cut all the fat out of everything here and not have some repercussions to the economy. And I think Trump knows that too. It was an excellent interview with Maria Bartiromo over the weekend, which I watched. And she asked about the stock market. And she asked him, you see, the Dow Jones falling significantly here. And he was quick to say, and maybe this is, a good thing if he's got this long-term plan. I don't know if the long-term plan is going to work, but he's trying to kind of sticking to it. He said, one, he's like, well, it's not down very much. And two, he was talking about, not watching the stock market at this point in time because he's trying to work at something else. So I think he knows the stock market, in the short term is not going to like the tariff talk. I challenged the whole tariffs in the first place. I've challenged them from the beginning. If you've been listening to the show, I believe that they will be inflationary. I believe that it will, have repercussions here, and we're seeing those repercussions clearly in U.S. stocks here right now. But I don't know. As of right now, he's not too concerned about the stock market. It didn't seem like in that interview.
And you guys are making a great, like what Joel brought up about the stimulus going on in different parts of the world. It is definitely not going on in the US. Another thing that people overlook, we always talk about like interest rates and monetary policy and what Powell's doing, but what gets overlooked too is what Janet Yellen did over the last 4 years too, is they were stimulating on the fiscal side. They were inserting liquidity into this market. That is gone. Right. So that's a big thing in this market is you do not have the same liquidity because the treasury is no longer expanding the balance sheet and doing all those things that Janet Yellen was doing. I mean, it's always this policy. There's two sides of the policy. There's monetary, which is what the Fed controls, and there's fiscal. Right. And you didn't have, and people were wondering for a long time, why is the market still going up when they're raising interest rates? And the reason that was happening because of all the stimulus on the fiscal side. So now you don't have that going on, and you don't have also, clearly we're not cutting interest rates. I think it's going to be very interesting. We're going to get which kind of just also leads us to this week's events. You're going to get I think the big things to watch this week are going to be the CPI report to see if we're still seeing inflation. That's coming on Wednesday. And then you get the PPI report on Thursday. They're looking for 0.3 for both of those numbers. And that could gauge whether or not you insert Powell back into the equation. If inflation starts to drop, and I really hope it does, then we're looking at the possibility of a May cut. Right now, Fed fund futures are pricing in. There's a 43% chance. Of course, we're going to get another Fed meeting here on the 19th of this month, where there's basically no chance that they're going to cut rates. But when you jump to May, it's now that percentage is now picking up a little bit. So 43% chance that they're going to cut rates in May. It even gets a little bit further. Sorry, that's my mistake. That's 39%. Then in June, there's a 74% chance that they're going to cut rates in June. So that's at least something that has been moving the probability of the next cut.
To stay on that subject, I just want to mention that a couple weeks ago, Blue Putnam came on this show and said you're going to have job cuts, you're going to have less spending, and then you're going to have tariffs. You add those up together, and you
get this market.
raises the possibility of a recession.
Yeah, we get this market. And I think, to Christian's point here, though, like, I think a little bit of why you're seeing it tick higher is maybe not, so much inflation concerns, but when you see the market going down, we know the Fed always says they're data dependent, but we know they're market dependent as well. We know the wealth effect plays a game here. So when the stock market really starts to get beat up, which it is starting to get beat up, again, we're not beat up too bad here to agree with Trump. You look at a long-term chart, we're back to where we were in November. So we're not really beat up too bad. But if the market continues to show weakness, it makes the Fed's job easier to start thinking about cutting rates. So again, I'm just going to say, because Powell would never say that they care about the stock market, but they do. So the wealth effect is a player here too. So I just want to say, if the market continues to show weakness, I think you will continue to see that May probability tick higher.
Let's shift gears. And there's always deals on Mondays, right? Well, not always, but we got a deal going on here that I find extremely interesting. Detroit, Michigan's Rocket Companies is buying Redfin in an old cash deal valued at $12.50 to get access to all those potential buyers. I was looking at Rocket before its last earnings report. This stock looks like a lot different chart than a lot of other charts. It came out with a good earnings report. It gapped up, it held the gap, and moves and make this acquisition. If I wasn't so bearish the entire world and the economy and the housing market and everything going into the tank, I like this deal. I do. What do you think?
I think the deal makes a lot of sense. I mean, and also one thing you gotta like is the relative strength that Rocket has had. I mean, you think about so many stocks getting beat up. Rocket's had a fantastic year. Maybe it was a laggard to leader to laggard. It was a 2024 laggard. And, but again, we started the year around $11. It went out at $15.77. It's down on this deal. So I'll ask you, Joel, I mean, now you get a dip on this and you like the deal. Would you be interested in buying Rocket here at $14?
Yeah, I would be. I don't think there's going to be any regulatory concerns, but I think if, because I'm I try and be even keeled, not perma bearish or perma bullish or whatever. But if you can see the end of and I really like their new commercials too. Have you seen their new commercials? Home, about buying a new home. There's a lot of people renting out there, and I know rates are, they're gonna have to get around rates somewhere. They're either gonna go lower, or they can come up with I don't know if you can go beyond the 30-year. But I'd like to see how the street, digests this deal. I'd like to see how the price action is. But I think it's a bold move in an uncertain environment. And Danny Gilbert's made some good purchases over the years. So let's see if this is
So
one of them.
it's a pretty big premium too. I mean,
It
12.50
is.
is the price, right? I mean, the stock Redfin was trading at $6.
I'm surprised
That's
they had to pay that much of a premium in this market. I mean, we're not Kansas anymore. I think they way overpaid. And that's probably why you're seeing Rocket get hit significantly here, because you got a stock going out that's basically, going out at near all-time lows at $5.82. A stock that used to be almost $100. And you think, like, why do they have to pay 76% or 80% premium? I that's my first thought, is like, wow, that's a huge premium in a really tough market. Like when we're in raging bull markets, you see premiums like this. You don't see them when we're in these tougher market environments. But good for Redfin shareholders. I will just say on Rocket, it's dipping obviously because of the premium that they paid. Long, if you're in this as a play, this is still a play on interest rates. I mean, Rocket and its chat saying as well is interest rates go lower, it's good for Rocket. So if you start thinking that Christian's numbers, he was just pointing out, may start ticking higher, that's good for RKT. And keep an eye on the TLT. As TLT, not today because it's got obviously its own specific news, but typically as TLT moves higher, Rocket moves with it. And I don't think it's a coincidence that Rocket bottomed right around the same time that the TLT bottomed.
It is. It's an all stock deal. I think I said all cash deal. Dennis, write this down. 0.7926. Both pretty liquid stocks, Dennis. You think you haven't done any arb
Yeah, no,
trading
I
in a
do. I,
while?
I always still trade them all the time. Like I don't put them on long term, but when they get out, to lunch, just short term, and obviously, today, first day is always tough. You're doing risk arbitrage. First day is always tough. It's got to balance itself out, figure itself out where it wants to be, figure out. I usually give it a couple days to settle down, and then I will start actually trading the spread. I mean, you're not going in there. People go to, I would make 10%, 20%, figuring all this out. I mean, you're picking up nickels. It's small peanut money, but I mean, all that stuff to add up. So I trade all the deals. I always have.
Not helping Zillow or Zillow Group. Those stocks are still mirrored in downtrends. Consolidation in Zillow. Open Door. Nah, not really helping that. Boy, we are just continuing. The sellers
Leaking,
are in
leaking.
full control here. I mean, here we go. I talked about 59, 56, 73. We're going to be there in about maybe by the end of the show here. Let's shift gears here.
Oracle tonight. Can we talk Oracle
Oracle.
just quick before Tim comes in? Because everybody's going to be watching this report. And the stock is trading down, going to go out near a 4-month low, it looks like. Obviously we don't know where 4 o'clock close is going to be, but as this time, it's right near the low. So you would say the bar is lower here for Oracle. But, this concern I want to ask Christian, because Christian's been talking about this, crowded AI trade. And Oracle has had a premium here because it's been viewed as an AI stock now. I mean, Oracle always historically has traded around 18 to 20 times earnings. That multiple has expanded significantly lately because, this is now an AI stock, and they took it from 120 to 190, which was a pretty big move. We pulled back recently here. And I want to know, Christian, is this, a dip that you're looking to buy?
I think also, noticing what happened with Broadcom on Friday. Now, again, I left early, but I was watching Broadcom just basically give it up. Now they did come back at the end of the day, but this is a good example. I thought I didn't find anything wrong. I don't know if you guys did. I thought their numbers were really good, so that they're executing. But Broadcom is an AI stock. In that same bucket, I would put Oracle in right now too.
Sure.
So I think that sure they could come out with good numbers, but I think again it's just how unfavored this group is right now. So I think even if they come out with good numbers, I think it's gonna have a tough time holding gains.
Yeah.
Now again, like Oracle's not as expensive as some of the other software names in terms of like price to sales ratios and so forth, but it's still right now. I mean, you're just seeing this group get unwound, and I've been talking about that for a while now. That I think that the AI trade is just coming undone, and that it needs to kind of come back to more normal valuations, which I think this is a repricing going on right now. So yeah, I think it's going to be tough. I think it's going to be tough for them to not only go up but hold the gains, similar to Broadcom on Friday.
I mean, it's all about NVIDIA too, and if NVIDIA starts turning around, a lot of these other stocks will start turning around as well. I mean, NVIDIA is sitting near its lows of the year. So we've bounced a few times. We obviously had the wicked bounce in February, which turned out to be a gift. And now, we're sitting down here near the lows of 109. You start thinking, as you start approaching 100, does this eventually have a date with 100? I mean, Kenny Glick has always been like those whole numbers are magnets, and he's always like, you get the 105, you get the 100, just as much as you get the 95, you get the 100. On the way down, it's the same thing. You get the 105, you get the 100, because as it gets closer, optionality can even drag those things in. So, I mean, it is an issue that your leader of AI, which is NVIDIA, is not really holding gains either. So it's hard to just come in here and say, rah, rah, go AI, when your leader of all leaders, NVIDIA, is still sitting near a 6-month low.
Dennis, do you have many bears by you?
No, but about 20 minutes away I do. So in town here, no. But further up,
No?
yes.
Well,
so why? Are they rubbing off on me?
There's been some bears spotted, lower Michigan, not very often. But in northern Michigan, there's a lot of bears. But you know where the most bears are? In the Colorado Rockies.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Tim
Intro, but you
Quast.
played the wrong one. It was such a good intro, and you played the start of the show, and you didn't play the special guest. It's okay, though. Don't worry about it. We let it go now.
I'm
This
impressed
is what
with
happens
the
when
video.
Brent is not here.
All right, I was so focused. I was going to
You
say
did
that was
so well, Joel, in that intro. The Bears coming in, the Rocky Bears coming in here, bringing in Tim Craw, and then he played the wrong thing.
It was a beautiful
Where's that Brett
setup,
Sturwood? We
Joel.
need him.
Oh man, I you know what? I guess I'm not perfect.
Well, but close to it, Joel. I mean,
Yes.
that's what matters. You're
Okay,
close
Tim,
to it.
talk to us. You warned us. You told us, and we didn't listen.
I even a blind squirrel can find some nuts. But no, you're right. And I wasn't using the fact that the bears in Colorado are now awake. When they crawl out of the caves and start looking for food, spring is here. I'm not sure that it means a bear market is here, but you're right. I've certainly the last two times I think that I've been on with you guys, my good friends, I have said I think that the market is very bearish and that the market could correct in Q1, and the NASDAQ has done that now. So it's better to be right than wrong is what I've determined, but it's also risky.
Can you? We're all excited. Can you show market structure edge here, Tim, and start showing you where sentiment is now? Because you've been right. Obviously to call a correction here for the first part of the year, which we've absolutely seen. I want to get your thoughts now that we've had, a pretty serious correction, not as serious, but a correction. Right. Do you think this continues, and does market structure edge think this continues?
Yeah, well, these things, as you well know, Dennis, they don't tend to be linear. That's the real challenge with a bear market condition. By the way, there's NVIDIA, and interestingly, if you buy NVIDIA at a 1 and sell the downtick in the last 90 days, you could have made 10%. Well, NVIDIA has been down 20%. So, you look where it is. It's at 1. I won't forget to go look at broad market sentiment, but it's at 1 and supply came down. If you talk about supply demand imbalances, I could look at that and make a case that short term, you might make money in NVIDIA, particularly because options expire next week. So, there's a short-term opportunity here potentially, and it may be true in the broad market. If you look at broad market sentiment, On Friday, supply came down. It's still over 50%. The problem to me with the market is that we've had this very extended period of weak demand and rising supply. What will that tend to do? It will tend to deteriorate prices. And the problem in the equity market, for those who know market structure, the mechanics, the regulations and mechanics of the market, is that the bid and offer are never the same. And the bid is lower than the offer. And so when demand deteriorates, the gap spread. And that's why markets, when they deteriorate, become very violent. It's a product of the rules. And so on the way up, somebody crosses the spread, volatility diminishes, and markets do well. We have a market that deals poorly with outflows and deals very well with inflows. And so what's going to happen next, we'll see. It's probable that we could have a short-term bottom. The problem is you turn around, you look around, next thing you know, we're down 20%. And I'm not saying that's going to happen. I'm saying that the conditions are there that could cause it to happen.
I mean, at what point, go back to the NVIDIA chart here for a second, because it's at a 1 right now, where, obviously demand is in the gutter here at this point in time. At what point do you buy? Like when it just starts to tick higher, when it gets off that 1? Or do you eventually say it's been on a 1 long enough and now is the time?
Right. Well, if you used early February as an example, you would buy it now. But again, what's the probability there? We do calculate probabilities in 90 trading day stretches, and you say, well, why that amount? Because it's 67 days is a quarter, so it gives us a transition from quarter to quarter, and models change, global macro data inputs change, people's risk management change. All of those things are in constant flux, and it's the problem with using an extended data set to produce a reliable indicator. But I would say, there's the possibility. It's very difficult to go out on a limb and say, oh, we should buy NVIDIA. I'm not saying that. I'm just saying that statistically, when it's at a 1, it has shown a propensity to bounce. Now, I think you have to take your gains quickly, not chances.
All right, Tim, you positioned yourself ahead of the weekend based on your statistical probabilities. And so you got to trade. You got to, not exactly what instruments you use. It's going your way.
Yep. So
are you just going to say, I'm not going to look at it? Or,
Oh no. I will bolt for the door. So what I did on Friday, and I've been using this tactic. So I had a big short strategy for quite a while, and so that paid off. And I'm not a risk-taking individual particularly. So when that trade paid, I shifted to a tactical approach. And here's what I prefer to do. Look, I'm not telling you it's the only way to do this, but I like to put trades on in the last 10 minutes, and it's because that's the reference price. All that money that tracks a model needs a reference price, and it tends to arise from market on close, limit on close orders that you can't cancel as we get near the close in the market. So I like to, in the last 8 minutes on Friday, this is what I did. I bought SPXU. I bought a hedge of SPXL less than the short, and I bought UVIX. There's my big position. So I'm hedging I don't know if the market's going to go up or down, but I'm basing it on a probability. The probability based on broad sentiment is that the market has a propensity to decline. The market moved all of its volatility on Friday and closed up. Well, what's the probability it declines? And it doesn't matter what the headlines are, very high. So my volatility trade is up 11% right now. My whole portfolio is up 4% pre-market. So that doesn't always work, but I'm not gambling on an outcome. I am not a big fan of the fact that you can make money in volatility because I think volatility is the enemy of returns. But under these conditions, you can trade volatility. But you don't do it randomly. How would I know that this would be a good time to trade volatility, rising supply, falling demand, and volatility that has exploded. If you look at the volatility in SPY, here's a key indicator. These are all things that you can know and should know as a trader. If you look at SPY, which is not a predictive instrument, it's a tracking instrument, but it does tell us about the conditions that exist in the market. So SPY hit 1 last week for the first time since 2022. Well, what happened in 2022? Right, so, and you look at the volatility of SPY, it's more than double its long run average. So you would look at that and say, I'm going to bet on volatility. And that's what I've done.
So you're not going to wait for yesterday's low, Friday's low, the low of the move. You're not going to wait for 5,600, 5,500, 5,400. This is a trade. You don't have there are no options on it, right? So you're not dealing with the premium gods, but you had your setup.
Yep.
You had your exit, and that's it. And then if the S&P goes to 3,000 today, you don't have any regrets. You put the trade on. You followed your setup. Okay.
Yeah, exactly right. That's what you do, and you don't look back. I don't want to sit around. I live in Steamboat Springs, Colorado. So I like to, as we did yesterday, snowshoe up the mountain and then come down the mountain and ski it. That's much better than sitting and looking at screens to me. So I'm very happy to take the gain. You take the gain, you don't look back, and if you produce the desired return that you were after based on a high probability strategy, be happy with that, and you can do it again. And don't sit and kick yourself if I could have made 20% on that trade. I mean, as you guys know, I like 2% returns because it's a product of volatility. As to levels, Joel, my problem with technical levels is that they are derived from factors that don't fit with the way that algorithms work. Algorithms are not using Fibonacci sequences or pick your technical signal. Algorithms respond to crumbling or recovering quotes in fractions of seconds. And they say, these things are what determine the direction of the market. And it all comes back to, can we cross the spread and make 1/10 of a penny? And that's what Citadel worries about. Worries, I put quotes around it. It's a machine. So you have to go into the market understanding that that's the case. And you can't beat Citadel, but you can look at volatility, demand, and supply, those three things, and determine what the probability is that you can produce a return, long, short, or in the gap. To me, that's what it all boils down to. And I don't do it perfectly. We human beings make mistakes. We're subjective. But to the degree that I follow the math, it is very successful.
Two things, Tim. One, they want to see Tesla. A couple people, I do as well, because this is went from one of the best stocks at the end of 2024 to one of the worst stocks in 2025. We know, obviously, the politics behind and a lot of other reasons being behind this. But they want to know, and I'm curious too. Is there any potential that we're going to eventually see a bottom here in Tesla? Well,
there certainly is. At some point, there will be. I was on a ski lift yesterday with one of the mountain ambassadors. They're a group of people who volunteer their time to help folks around the mountain, and they get to ski for free. So I'm riding up the Burgess Creek lift with this fellow, he knows I'm in the quantitative data business. So he said, "Well, what about Tesla?" And he said, "I'm not. If it drops below 200, I'm probably a buyer." Well, it's not the right way to think about it. Prices are capricious. Prices fool you. Demand and supply will manifest, and it will be a reflection of everybody's sentiments. So, you look at the data here. Once again, it's very, very simple. You can look at Broadcom and Christian. What happened on Friday, and the problem for Broadcom is supply rose. So if demand stays level and supply rises, it's just not good until those conditions change.
People selling the rep. People simply selling the rep on Friday.
Right. And see, here's an issue too. As low as this is at 42%, that's well below the broad market. This rise in supply is not good. You want You want really only, there's only one rule to follow with Tesla. Own it at 5 or higher. If it's not there, don't own it. And that, on that basis alone, over the last year, you could have made 85% in Tesla. Now, buying and holding is still a pretty good return, but you would have missed that entire slide, which is the worst fall for Tesla since it went public. So, that to me is it's a simple approach. You can look at it mathematically. If Tesla's above 5, own it. In there, own it. Don't own it here. Don't own it in here. Don't own it in here. You say, well, it bounced to 10. Yeah, but if it deteriorates, if the demand side falls and the supply side rises, get out. Just save yourself.
As soon as it falls back below 5, cut it out.
Right. So here's
or it gets back above it. Tim, talk about
Exactly.
2022. Talk about the reading that you saw, how long you saw it for, and what was the trigger point that brought it off one that brought us into back to the Holy Land.
Yeah, so it to me, volatility is a canary in the coal mine. So in December, volatility began to increase, and you could just pick your measures. So keep this in mind. We call it the 1, 2, 3 rule. So SPY moves 1%. The basket moves 2, just a round figure. That's why ETF market making is so profitable, right? I mean, that's why Citadel and Jane Street make $10, $12 billion a year. They're the ones keeping everything aligned. Momentum moves 3% or more. So when that relationship begins to break down, we have trouble. And it started to break down in December. December 18, we had the biggest volatility event that I can find in SPY on record. And it's the volatility of volatility. How much was it moving December 17th and how much did it move December 18th? 825% increase in volatility. I immediately said, I am going to go to a big short, because that is something that will go away and then manifest again. And it will go away and manifest again. Why? Because all of that gets baked into the data set that all the algorithms rely on. And so that condition has not gone away. I do think we could have a short-term bottom. Stocks recover, do pretty well into options expert. I'm not going to say that's going to happen.
That's what I wanted to talk to you about. I wanted to talk to you about right now, tactical long shorting, the end of this week and into quad witch.
Right. Next week is a big week. You've got options expiring Tuesday, Wednesday, Thursday, Friday. There might, there's one gap in there, but it's a rare situation where VIX expirations are on Tuesday instead of Wednesday. And so you have all of that going on. You have quarterly S&P index rebalances, NASDAQ index rebalances. There's all kinds of things going on. People don't know exactly what to do. There are global macro risk strategies that tie to derivatives. The Aladdin system from BlackRock relies heavily on that, used by $20 trillion of assets. All of that is occurring. I think that short term, there will be effort by people to be positioned into that could produce returns. But do I think that that's the end of this? I don't. And it goes back again to SPY. When SPY deteriorated, let's go look at this really quickly, SPY in 2022. Now, and when it's fine, the data will tell us. It's not really a mystery, because all of the behaviors will manifest and tell us what to expect. And if you back up and look at this data in SPY just to 3 years, you can see what happened back here in 2022. See, it kept going 6 times, I think, went to 1. And we have not seen that since until now. So is this a one leg down? Well, history tells us no. And so this could be a very rocky period for a while. And again, it's why I think that we could have a correction. There are always opportunities there. You could trade low volatility. You can trade into options expirations. You can go long, short. You can trade volatility. There are always opportunities, but you have to be aware of how the conditions are changing. And those are the conditions that currently exist until the data tell us otherwise.
We want to do ticker time with you, Tim, here. We do ticker time. So throw your tickers in the chat here. Okay. But before we go to ticker time, so they're going to get some tickers for you. One quick one. go to your momentum filter. You know, we
Okay,
know you have
will
your
do.
momentum stocks.
Yep.
What are we seeing in there?
And here's the quick look at Broadcom. So here's the issue. That's the problem. Unless and until that goes away, Broadcom's going to have a hard time. Now, it could happen very quickly, but that's what you look at. You would say, when that reverses, there's your opportunity short term. Now, back to momentum, there's nothing in the portfolio. You back
There's not a stock in there? None?
There are four.
One.
There are four. There are
What
four
are they?
four in momentum, 6 in low volatility.
What are the 4 in momentum?
So the 4 in momentum are, and the winner is, the envelope, please, are U.S. Steel.
Benefits from tariffs.
Yep. And in fact, they're both. These are both steel companies. A Chinese stock, and no surprise there, and Nutanix. And that's it. And look at the volatility. That's what you're trying to capture. So you want to take a piece of that volatility by knowing that the demand supply balance works in your favor. Now, it's very difficult on, at least early in the day today. Maybe around 11:30 a.m. Eastern time, things mellow out and you have a chance to the upside. That happens frequently. And I would attribute it to, and Dennis, you might have a different opinion, but there's an effort to try to figure out where the reference price is going to be. And machines are doing that for the end of the day. But that's it. So, I prefer to see, 20, 30 choices in momentum to know that the momentum opportunity is reliable. And this is a challenging market to trade momentum. Ironically, in a market that is volatile, you're better off in low volatility. Our model low volatility portfolio, where it's kind of a buy and hold model, that's up almost 5% year to date versus what the S&P has done. And it's because the money tries to shelter in things that have less volatility than the broad market during periods of volatility.
Hey Tim, what are some of the names in the low volatility portfolio? Because I've noticed that's really been working as well, and dips are being bought in some of the low volatility names.
Yeah, and it's I would say, Christian, it's a dicey business, but here's a great look. So Honeywell, UPS, Marsh & McLennan, that insurance group of let's see who else is in that. You would put AJ Gallagher.
Progressive is doing very well,
right?
PPR, yeah.
Those are very good stocks to own under these conditions. The telecoms have very little volatility. To me, those are not great businesses, but during periods like this, they've done very well because that's where people go to shelter from the storm. I don't know this company, Veralto. Certainly, we know Amitech. Those are examples. You notice the market caps these are all large caps to us. Anything above, it's right on the borderline. You can say, well, it's a mid cap, but they're large, liquid, and look at the volatility. So none of these are more than 2.2% volatile. So they're much less volatile right now than the S&P 500, which has seen volatility rise to 3.1%. It's a 60% increase over the long run average in the basket. Well, it gets really difficult. For index funds that need to track a benchmark, they need 2% volatility or the wholesalers stop selling the fund and they can get in trouble with regulators. So what do? They all buy the same stuff and that stuff goes up. That's the advantage that you're using here.
All right, I'm going to hijack ticker time.
Yep.
Okay.
Hijack it.
RKT.
Say again, Joel.
Rocket.
Oh, Rocket, because they're
Rocket
buying
companies.
Redfin today, right? I guess. I mean, I don't know why you would buy Redfin, but okay. It's actually pretty good, right? The supply side isn't awesome, but look at that. Demand began to take off here. So, there was and that's why you watch it. Here too, I would say it's a very volatile stock, but own it over 5 and you're probably going to do pretty well. And there's this only, one little week period where you had right at February options expirations. You had a little weak demand and high supply. Probably those could be bear bets into expirations next week. They may or may not pay off. This is those people might get squeezed, get called because demand's pretty good here. I don't love stocks at 60% short, but demand trumps supply if you prioritize them.
Lots of people want Baba. Let's hear Baba.
Yeah, Baba.
Okay.
It's going to be a 10.
Probably is. I mean, Chinese stocks have shown up. Look at that. It just tailed off. Now the supply side is pretty good. It's come down too. But if this drops below 5, you should be out. I mean, I'd look at that and say, take your gains. If you've had gains, you can always come back to it, but you can't get money back that you get back to the market. Yeah. So you're right, Joel. Look at that. It's been epic, right?
I can
It's
see
just been
Dennis
epic.
going like this right now.
Sell, Mortimer, sell. Get in there, sell.
Oh boy, we got a lot coming in. Oracle's tough because
Okay.
it has
Earnings
has
tonight.
earnings. How about AMD? That's got to be like a -1.
Do they go negative?
Oracle, they're hair pulling because they do the wrong thing when they report results. They're a product, not a story. But they by how they present earnings to the market, they create arbitrage opportunity, and that stock is very volatile as a result. And it shouldn't be. It shouldn't be. It's a very large stock. Yeah, I'd look at this and say, it's miserable. It can't get to 10. AMD is a momentum stock. If momentum stocks don't get to 10, avoid them like the plague. And I could look at the supply side and say it's good, but it also means market makers have left this. And so unless and until those conditions change, I would avoid it. We'll know when demand returns to it. This is, what you want to see in AMD, as in BABA, and it really hasn't been good for a long time, right? So why have you been unable to make money in AMD? Because it's not spending any time at 10. This was the best period in, after the dip in September where it got to 10 and you could make money. The moment it deteriorates, take your money and run.
As soon as it ticks 9, like when it ticks 9, like just a tick down?
Ticks down. To me, momentum stocks, own them at 10. The moment that it ticks down, leave. I mean, it doesn't always work out that way, but why hang around?
Can it go 9, 10, 9, 10, 8, 9, 9, 10?
It could, but it doesn't tend to, does it? It doesn't tend to. So that's why you say, well, I will always default to the probability. Sometimes, a small amount of the time, you miss out on a return, but you can always choose something else.
Is there any hope for Intel?
Let's. I don't know, Dennis. I don't know.
You did AMD. Is there any hope for Intel? None. No hope.
Right? It just, all of these look the same, right? There just isn't any, there's just nothing in it that makes you feel good. You say, well, it was at 10. Why did it decline? Look at the supply side. If the supply side rises, and really the rule of thumb, 10% or more over the trend, it's going to have a hard time. Why that number? Well, it means there will be a market making imbalance. Too much supply, demand stays the same, your price is going to deteriorate. I don't like it. You could always do this. You can always go look at a year and say, what has it done? Well, it's just been miserable, right? There was almost no time where it was good to own. You could say, maybe you could make some money in here, particularly when demand shot up and supply plunged. That was the one shot. Big divergence, make some money, take the gain and move on. But that's no good. And this is a condition right now. It's good. It's been persistent in tech, and our market depends on tech for momentum, and that momentum trade is just not very good right now.
One more, Palantir.
Palantir. This could be the all-time favorite pre-market stock, right? At least in the last couple of years.
Dennis made a great call.
You could almost tell, like,
yes, he did. He did. That was a great call, Dennis. You pegged it almost to the minute.
I screwed it up. Christian, what were you going to say?
I was going to say, even before the results come in, you're going to be able, you should know what Palantir is going to tell you, because it's in the same bucket of all the momentum and the growth stocks. What do you got, Palantir?
It is, right? You've got demand at 1, and you say, well, can you buy 1? Well, you can always go check. You can always, you can go profile to see what happens under these conditions. And it's a blunt instrument, but it will tell you what happens on the demand side. But here's the trouble. Demand at 1, supply rising. It's not good, right? Those things, for prices to rise, those things need to move opposite each other as a central tendency. When it was at 10, it was killing it. The moment it deteriorated, leave. You say, well, Tim, the supply fell too. Demand trumps supply. If demand falls, and if supply is rising and demand is very strong, it will still hold. But this deterioration occurred almost at the same predictable time when options expirations, February
I
options
lied. One
expirations.
more. APP.
Oh, app loving, getting
Same
attacked
thing.
by fuzzy
They're not
panda.
loving it, Joel. I'm going to
we-
tell
I'm
you
going to
right
say
now.
before you even get the results,
Okay.
it's going to be the same exact thing. They're all in the
It is.
same bucket.
They're all in the same boat. You're exactly right. It was good. And here, Joel, here's an example of 10, 9, 10. Could you have stayed and made money? Maybe. But really, by the time it deteriorated, your price was already lower than if you had just left here, right? Just leave. It's just no sense. Find something else. And no, this is no good.
Okay, Tim, we kept you. I'm not paying you overtime today. Okay,
That's
and
all right.
if you miss your ski lift or your snowshoeing and your wife is mad at me, don't tell her it was my fault.
Okay.
Okay.
It'll be just between us.
Okay. All right. Tim Quast, you know him.
Good
Market
to see you guys.
structure
Thanks very
X.
much. Have a great
All
week.
right.
Thanks, Tim. Okay, so can I just say one thing before I know we're going to wrap up in a minute, but
Yep.
that's you could tell to me like what the numbers or what he was seeing in market dynamics even before, and I think it's just really important to understand, especially when you got the VIX like in the mid-20s like this. What happens to all these stocks is they begin to kind of move the same way. When volatility increases, right, the movement in a lot of these stocks gets to be all the same. And all of these growth stocks, I know that they're different companies and they do different things, but you kind of have to think right now until the volatility drops, until the volatility gets back below at least 20, right? All of these stocks, whether it's an AppLovin, whether it's a Palantir, whether it's an MSTR, they're all going to move the same way, and they're all seeing supply rise, short volume increase because they're being shorted as well. So, while we're going through tickers and so forth, it's just very important to understand the market dynamics right now of what's going on.
Yeah. And we've said that for years. I mean, when you start seeing the volatility, just repeating what Christian said, all the stocks start to tend to trade together. And you see those defensive names really, that's where the market goes to. I mean, look at Verizon. Verizon is just blasting off. You're like, wow, this company's doing great. No, it's a benefactor of this growth trade coming off, and people are going in defense. They're looking at Verizon with a 5.8% dividend, and they're like, that's way better than losing 10% a month. So, I mean, this is just, where we're at. This trade reverses when the growth trade starts to reverse, though, too. So you can't marry Verizon. Like, when I come in and buy Verizon now, no, I think you're absolutely doing it backwards now. If you think this, continues and you think the growth, that the S&P and the Qs are going to continue to go down, the growth rate is going to continue to come up, Verizon probably still goes up in that environment. But, a lot of these stocks that are rising, like the consumer staples and that, isn't because all those companies are killing it. It's because they're not getting killed.
Okay, well, a little extended PMP here. We'll just wrap things up. In the red, off the pre-market low. I just got one number for you on the downside, 56.73. That was Friday's low, current low of the move. Jonathan Corpina is going to join us on tomorrow's show. I don't know if he's going to be on the floor working from home, but he knows what's going on the floor on the New York Stock Exchange. Dennis, we missed you on Friday. Great to have you back, folks. We're going to wrap it up on this Manic Monday.